In part one of this video, we introduced you to the Home Affordable Modification Program, or HAMP. Its benefits, basic requirements, ways your mortgage servicer can modify your loan to make it more affordable, and a before and after comparison of a typical homeowner's payment reduction. Now, assuming that you meet the eligibility requirements for HAMP, as we discussed in part one, and your mortgage servicer offers the program, let's discuss the information you will need to provide your mortgage servicer. Generally speaking, steps your mortgage servicer will go through to evaluate your situation, what you need to do to be successful, and finally, additional resources that can help you. Your mortgage servicer must have a clear understanding of your current financial situation in order to make an appropriate determination. So you must assemble this information in advance of speaking to your mortgage servicer. It is critical that you provide accurate information during your initial conversation with your mortgage servicer, as this information will be verified and inaccuracies may delay or disqualify you for a HAMP modification. The key financial documents you need to assemble include your 2 most recent pay stubs, if you are self-employed, your quarterly or year-to-date profit-loss statement. You may be asked for your 2 most recent bank statements, and you may be asked for your most recent tax return. A modification may involve some or all of the following changes to your mortgage loan: adding any delinquent amounts to your loan balance, reducing the interest rate on your loan, extending the term of your loan, delaying repayment of a portion of mortgage principal. Let's apply this information to help us understand how Joe and Betty Smith's payment was reduced under HAMP in the example in part one. The objective of HAMP is to reduce the borrower's monthly payment, including taxes, insurance, and association fees, to 31% or less of their gross monthly income. In the Smiths' case, their monthly income has fallen 50% from $5,000 to $2,500. So the target payment is $775. First, the mortgage servicer brought the Smiths' loan current by adding $3,259 of delinquent interest to the outstanding principal balance. Second, the mortgage servicer reduced the interest rate in increments of 1/8% until the target payment was reached, or the interest rate reaches the 2% floor. It's important to understand that mortgage servicers will only reduce the interest rate to the point where the target payment is reached and not below. In the Smiths' case, even with the interest rate reduction to 2%, the payment was only reduced to $1,051, therefore not meeting the $775 target payment. Third, the mortgage servicer can extend the term up to 40 years or 480 months. In the Smiths' case, even with the term extended to 40 years, the payment was only reduced to $845, still not meeting the $775 target payment. Lastly, the mortgage servicer can attempt to achieve the target payment by deferring some principal. When the mortgage servicer defers principal, the Smiths will not be charged interest on this amount during the deferral period. This deferred principal is due either when the loan is paid off, the property is sold, or at loan maturity. In the Smiths' case, by deferring $31,298, the mortgage servicer was able to achieve the $775 target payment. If, at this point, the mortgage servicer had not been able to achieve the target payment, they would have discussed other alternatives with the Smiths. Once the mortgage servicer determines that an affordable payment can be structured, defined as 31% of the borrower's gross monthly income, and all other requirements are met, the borrower is then deemed qualified for HAMP and will be offered a trial period plan. Under this trial period plan, the monthly payment will be the target payment. In the Smiths' case, $775. At this point, your mortgage servicer will send a package containing confirmation of your new payment, HAMP instructions, documentation requirements, and other materials that you must sign and return with the first trial payment. It's very important that you follow the program instructions exactly as given, returning everything requested together at the same time and on time. The trial period plan includes the borrower making 3 to 4 monthly payments at the target payment amount before the loan is officially modified. During this time, the mortgage servicer can determine the borrower's ability to manage the target payment, allow time for the borrower to send in the required documentation, and complete the necessary paperwork. If the borrower is unable to make the trial period payments or cannot meet the necessary qualification requirements, the loan terms will not be modified under the HAMP program. Once you have successfully made all of the trial period payments and returned the required documentation, your mortgage servicer will send you a modification agreement to sign. Once the modification agreement has been signed and returned to the mortgage servicer, your loan is officially modified. You have now successfully completed a HAMP modification. Ask your mortgage servicer about pay-for-performance incentives that may be available to you under HAMP for timely payments. While the HAMP process may seem overwhelming, patience and diligence are important. Thousands of homeowners are in the same situation as you, and mortgage servicers are working hard to find solutions to make mortgages more affordable for homeowners. Important things to remember. Be your own advocate. Immediately return your mortgage servicer's phone calls. Open all mail from your mortgage servicer. Complete all of the documents sent to you. Promptly return all requested documentation. Follow up to ensure all documentation was received by your mortgage servicer. Make your trial payments on time.